mid-tier miners, Canada's Mandalay Resources and Australia's Alkane are joining forces in a deal that aims to create a more powerful gold and antimony producer with global reach. The merger promises stronger cash flow, increased production, and better access to capital markets. Well, at the center of this transformation is Mandalay's president and CEO, Fraser Bourchier. He joins us now to explain why this merger makes sense, what it means for shareholders, and how the company plans to unlock more value from its mines in Australia and Sweden. Fraser, thanks indeed for your time.
Well, thanks for having me, Devin. I appreciate it.
Let's start with the headline. Why was now the best time for Mandalay and Alkane to merge?
Well, you summed it up actually in your introduction. I mean, the timing of this is ideal, somewhat fortuitous with rising gold prices and antimony prices. We've been working on this for many months, but it really capitalizes in terms of that growth, cash flow generation, capital market size, trade and liquidity, index listing, Australian ASX re-rate, access to capital markets. It all really came together, so the timing is great, even though we've been at this for probably 6 or 7 months.
Mm-hmm. Now, the deal has been pitched as a merger of equals, but when you look closely, Alkane does hold the reins on this one here to some extent. What does the balance look like in terms of leadership here, and how should shareholders interpret the structural part of leadership?
Yeah, so in terms of Alkane probably holds the balance of reins maybe on the reserve side, resource more, but generally it's pretty even down at a 55-45 ratio, 55% Mandalay shareholders, 45% Alkane shareholders. It's pretty similar in terms of a number of metrics. But to reflect that from leadership perspective, in terms of the board, to expect a 55-45 majority Mandalay, it will be a majority Mandalay board. And from that, I mean 3 of the directors are from Mandalay, the current chair, myself, I'll move on to the board, and an existing board member that we have, Dominic Duffy, the previous CEO, was in my position. So those are the 3 Mandalay. The 2 Alkane, one is the founder, Ian Gandel, a significant shareholder, as well as Nick Erner, who will be the CEO, or what we call managing director in Australia. He'll be the executive director. And then we have an independent director coming in that is he was currently on the board, although he just recently retired, from the board of Barrick Resources, CIBC World Markets, 15 years, very knowledgeable guy. So that's how we balance it on the board level. On the executive level, Nick Erner will stay as the managing director, so my equivalent, president, CEO. It's 2 producing assets in Australia, so it's a little bit more Australian-centric, but not necessarily, but that makes sense. And the operation still in Sweden, and we also have a growth project, Kaiser, also in Australia. So that balance, plus his team. That being said, 2 members of my executive team, the Chief Operating Officer and the VP of Exploration, Ryan Osterberry and Chris Davis, who live in Australia, will also be part of that executive team going forward. So we think we've balanced it nicely between the board, with Mandalay majority position, and the executive with Alkane a majority position.
Yeah, makes sense. Looks like a very strong structure from top to that entire area. What does this merger create in terms of growth potential here? And I'm talking about the roadmap as we look beyond 2026.
Look, I mean, so the situation is, and of course these will be pro forma board decisions, but the reality is we'll have a lot of cash, could even clean up the debt, well over 100 million in cash with no debt is possibility. A relatively small 2-year remaining hedge position at 17% pro forma. So now you've got cash, you're generating more cash, and I think generally there are 2 things we'll be looking at significantly. One, of course, in terms of capital allocation, will be continued exploration, organic exploration. These are 3 prolific regions they sit in. Costerfield in the Bendigo-Ballarat Belt in Victoria. Tomingley is in a very highly prospective area. And then Björkdal, of course, we're familiar with next to Boliden in Sweden. So organic exploration has been a core pillar of both companies, and that will continue, if not potentially ramp up. But the other growth, and so those growth profiles, we range from 4 to 10 years in mine lives and continue to replace that. The other is capital allocation for throughput increase, potentially at Tomingly, to take that from 75,000 ounces to over 100,000 ounces a year. So there'll be discussions about that capital allocation. And then we will also continue to look, like we did for the last year or two at Mandalay, at other inorganic opportunities. The M&A side, whether it's asset purchases and or other accretive, non-dilutive mergers of equals like we're about to transact on here. So, and we have a global perspective still. We know how to operate globally. Time zones we manage quite well. So we're excited about that. And I'm sure the new board coming together will talk about that and make those decisions fairly quickly.
All right, the TSX listing. I mean, that's what you're seeking. I want to find out, what is it exactly that you want in terms of investor support and liquidity advantages? Where does that lie?
Look, I mean, so Mandalay, as you know, already on the TSX, Alkane already on the ASX. The benefits of having dual listing, we think there'll be significant liquidity on both. There's no assumptions on if one, shares migrate to another. ASX may well be the primary, but the interest and inbounds we've had on the TSX for the existing shareholders and retail has been quite exceptional. So we think there's significant benefits. There's nothing to be gained by not having a trade on either exchange. So we'll keep trading on both. Of course, when the deal closes, the Mandalay shares will become Alkane shares at a ratio of 7.875 to 1. And we think that gives us access to capital markets, retail, funds on both sides of the ocean, so to speak.
And I want to talk about that because now you've got cash in the bank, you've got new exploration potential, then you have the long-term Alkane and Mandalay investor. What message are you sending to that investor?
Look, we have created so many more options and flexibility with this combined entity. We've cleaned up the debt. We're generating more cash. We'll have a hedge position that's much smaller and eventually disappears. So now that gives us flexibility, and we're not in a corner or panicked to have to do anything with a pristine balance sheet and continue to cash generate. How do we return that back to shareholders? Through whether it's investment in our existing operations, new M&A, dividend, share buyback. There's lots of options on the table. That will be explored rigorously with the new board, all with the idea to return to shareholders. And if it makes sense to grow even more, which we're keen on, as long as there's a return on that growth, then that's the path we'll pursue. It really puts us at the next horizon. I mean, we were, $500 million market cap, respectively, whatever currency you look at, Canadian or Australian. Mathematically, it puts us to $1 billion. We're dealing with a different sphere, and that's before the re-rate that we feel is very likely to happen due to the index listing we'll now be on.
What timelines are you working on for that re-rate?
Look, I think to be realistic, if the deal closes in July or August, there'll obviously be a rebalancing for the Alkane shares on the JDXJ. They're already on the JDXJ. More than likely, it's going to qualify for the ASX 300. Those rebalancings happen in September. I think as people understand the story better and better, as things flow through and we explain the overall pro forma growth story, I think we expect that to be happening towards the end of this year and certainly will flow in the next calendar year. So I think there are a number of funds that are quite excited. They may make sure that everything goes through in the shareholder support. We have that support, so we're pretty convinced on both sides that'll go through. And then we expect the re-rate to happen towards the end of this year.
All right, fantastic. Mandalay CEO Fraser Brochier, thanks very much indeed for your time.
I appreciate you having me. All the best, Evan.